When most people hear the word crisis, they instantly imagine chaos. They picture collapsing markets, empty bank accounts, panicked headlines, and futures slipping through their fingers like sand. They see fear, loss, and ruin. But what almost no one realizes is this. Every major financial collapse in history has secretly been the greatest wealth-building opportunity of its time. There is a reason you don't hear this in school. There is a reason it never makes it into ordinary news broadcasts. And there is a reason the wealthy seem almost calm when everyone else is terrified. Because they understand a truth most people never learn. Crises don't destroy wealth, they move it. From the unprepared to the prepared. From those who react emotionally to those who act strategically. From panicked sellers to disciplined buyers. Think about it. Every time the world thought the financial sky was falling, a small group of people didn't just survive, they came out richer than ever. Not because they were lucky. Not because they had secret insider information. But because they understood the pattern. They understood that when markets burn, prices don't represent real value. They represent fear. And fear is the single greatest discount mechanism in human history. Yet the average person does the opposite of what works. They buy when prices are high and everyone is celebrating. And they sell when everything becomes cheap, because the fear becomes unbearable. This is why in every major crash, wealth doesn't disappear. It simply changes owners. And now, as we slowly approach 2026, the signals are flashing again. The same rhythms, the same distortions, the same pressures that preceded previous resets are building beneath the surface. Most people will ignore them. Some will panic when it's too late. But a small number, the ones who understand the cycle, will position themselves for the next great transfer of wealth. In the next parts, we're going to break down why these cycles happen, how they enrich the prepared, and what the approaching reset truly means for anyone paying attention. But first, you need to understand one thing. Crises never punish everyone equally, they only punish the unprepared. If you open a history book, it will tell you about market crashes, dates, numbers, graphs. But what those books never tell you is what happened right after the panic. And that's where the real story begins. Let's rewind. 1929, the crash that ended everything. People remember the fear. They remember the breadlines, the bankruptcies, the devastation. But here's what they don't remember. Those who bought during the worst days of the Great Depression saw gains that would shape the financial future of an entire century. Stocks trading at pennies became fortunes. Entire industries that looked doomed were quietly scooped up by investors who understood a simple truth. Value doesn't disappear, it only hides during panic. 2000, the dot-com implosion. Everyone talks about the bubble. Few talk about what happened next. Amazon, a company that dominates global commerce today, fell from over $100 to $6. $6. The price of a cheap lunch. Netflix traded for less than the cost of its subscription. Apple, Google, companies that would later reshape civilization, were selling for prices that would be laughable today. The investors who stepped in weren't geniuses. They simply recognized that behind the fear, the technology revolution wasn't dying, it was just resetting. And that reset made billionaires. 2008, the housing collapse. The headlines declared it the end of the world. Banks failed. Jobs vanished. Families lost homes. But while the world was burning, a small group of investors was quietly buying real estate for 30 cents on the dollar. They were acquiring world-class companies at multi-decade lows. They were positioning themselves for the longest bull market in American history. While millions lost everything, they were building generational wealth. The pattern everyone misses. Every time a crisis hits, the majority believes it's the end. But every time, the aftermath becomes the beginning of the greatest wealth transfer of that era. Not because the world magically improves, but because panic pushes assets into the hands of those prepared to buy when everyone else is forced to sell. This is the part of history most people skip. But the wealthy study it religiously, because history doesn't repeat, but it rhymes with perfect rhythm. And that rhythm is now echoing again as we move toward 2026. If you zoom out far enough, the economy stops looking chaotic and starts looking predictable. For more than a century, the financial system has moved in waves, long, powerful cycles that rise quietly and break violently. Every 18 to 20 years, almost like clockwork, a pressure builds inside the system. Debt expands. Speculation accelerates. Optimism becomes delusion. And then, the cycle resets. We saw it in 1929. We saw it in the stagflation crisis of the 1970s. We saw it in 2000. We saw it in 2008. And now, we're approaching the next turning point. Most people aren't paying attention. But the smart money is. Because the signals aren't subtle anymore, they're screaming. Warning sign number 1, valuations detached from reality. The market today is priced as if bad news is impossible. Companies with minimal profits trade at prices once reserved only for the strongest corporations on earth. Speculation is treated like strategy. Hope is mistaken for fundamentals. This disconnect always resolves the same way. Reality snaps back, and overpriced assets fall the hardest. Warning sign number 2, debt like we've never seen before. Consumer debt, corporate debt, government debt. Every category is sitting at levels that would have sounded absurd just 20 years ago. Households are spending money they don't have. Companies are balanced on mountains of cheap credit that becomes lethal when interest rates rise. Governments are borrowing at a pace that borders on mathematical impossibility. Debt is like gravity. You can ignore it for a while, until it pulls everything back down. Warning sign number 3, institutional behavior has changed. The public is still celebrating, still posting gains, still believing this time is different. But the institutions, the ones who've survived every cycle, are doing something else entirely. And major hedge funds are moving to defensive positions. Wealthy families are quietly accumulating hard assets. Institutional investors are rotating out of overpriced growth stocks. And one of the largest cash piles in modern history is sitting inside Berkshire Hathaway. The people who understand cycles aren't buying the hype, they're preparing for the turn. So what happens in 2026? No one can predict the exact day or the exact trigger. But cycles aren't about dates, they're about pressure. And right now, all the forces that precede a reset are building simultaneously. Rising interest costs, slowing consumer demand, cracks in manufacturing, stress in commercial real estate, and global monetary policies stretched to their limits. The system is reaching the point where it can't stretch any further without breaking. And when it breaks, the world won't experience a simple correction. It will experience a full system recalibration. A reset, the kind that only happens once in a generation. Most people will see disaster. But those who understand what's coming will see the greatest buying opportunity of their lifetime. When a crisis hits, people assume the market decides who wins and who loses. But the truth is far more uncomfortable. Most people lose because of their own behavior, not because of the crisis itself. Crashes don't choose victims. People choose how they respond. And the difference between those who collapse and those who rise is always psychological. The crowd, following emotion. The average person doesn't invest. They react. They wait until everyone around them is talking about gains. They buy only when it feels safe, when no one is warning, when optimism is everywhere, when prices are already high. And then, the moment fear enters the room, the moment headlines turn red and charts turn down, they panic. They sell the very assets they should be buying. They lock in losses. They flee at the worst possible moment. To them, the crisis feels like a predator. Something that hunts them, traps them, destroys them. But to the wealthy, the crisis is a window. A door that opens only for a brief moment, revealing opportunities that don't exist under normal conditions. The prepared, acting rationally when others can't. The wealthy understand one thing that almost no one else does. Opportunity doesn't appear when times are good, it appears when times are bad. They don't wait for a green market to buy. They wait for despair. They don't chase rising prices. They wait for assets to fall below fair value. They don't panic when volatility hits. They've planned for it. This is why the same crisis that wipes out millions creates fortunes that last generations. While others sell in fear, the prepared buy in silence. While others lose control, the prepared execute their plan. While others wait for certainty, the prepared take disciplined action. The transfer no one talks about. When you understand what's actually happening during a crash, the picture becomes clear. People who took on too much debt are forced to sell. People who speculated are forced to exit. People who never saved have no liquidity. People who never studied cycles don't know what to expect. People who rely on emotion hand over their assets at the worst possible prices. And who buys all those assets? Those who prepared. Those who studied. Those who understood the cycle. Those who position themselves before the storm. This is the wealth transfer. Not a metaphor, a literal mechanism. A conveyor belt moving assets from the impulsive to the disciplined, from the leverage to the liquid, from the panic to the strategic. The most dangerous lie the public believes. Most people think, I'll prepare once the crash starts. I'll act when I see it happening. But that's like buying fire insurance after the flames are already in your living room. By the time the crisis is obvious, the opportunity is gone. Prices have already fallen. Liquidity has already evaporated. and the masses are already in full panic mode. The wealthy don't wait for the crisis to begin. They prepare while everything still looks fine. Because that's when preparation is possible. And that's the stage we're in today. If there is one idea that separates those who thrive after a crisis from those who fall victim to it, it's this. Preparation isn't something you do during the storm, it's something you do before it. And preparation always begins with the same foundation: liquidity, quality, and discipline. 1. Liquidity: why cash becomes power, not safety. When markets fall, people love to say, cash is king. But most misunderstand why. Cash doesn't matter because it protects you. Cash matters because it gives you the ability to buy what others are forced to sell. Liquidity isn't about hiding. It's about positioning. The investors who had cash in 2008 didn't just protect themselves, they were able to purchase real estate at historic discounts, world-class companies at multi-decade lows, entire businesses for pennies on the dollar. Cash during a crisis is not a shield. It's a weapon. 2. Quality: the only assets that survive the storm. Crashes reveal a brutal truth. Most assets aren't real, they're illusions propped up by optimism. When the tide goes out, speculation evaporates, hype collapses, and only quality remains standing. Quality looks like this: strong balance sheets, essential products or services, consistent cash flow, real value regardless of market conditions. These companies don't just survive downturns, they come out stronger, acquiring weaker competitors and expanding their dominance. The same is true for real estate. In downturns, speculative properties in weak locations become worthless. But prime, irreplaceable locations? They remain scarce, useful, and desirable, even if prices temporarily fall. And then there's gold and other precious metals. Not to make you rich, but to protect your purchasing power when currencies lose credibility. In a storm, quality isn't optional, it's oxygen. 3. Discipline: the hardest part of crisis wealth building. The strategy sounds simple. Buy low, sell high. Prepare early. Stay calm. But simplicity doesn't make it easy. When your friends are celebrating endless gains, discipline feels unnecessary. When your colleagues question why you're sitting on the sidelines, discipline feels uncomfortable. When the media shouts that the boom will last forever, discipline feels foolish. And then the cycle flips. Prices fall. Panic spreads. News anchors start predicting the end of capitalism. People rush to liquidate everything they own. This is the moment that tests everything. Every instinct tells you to run. Every headline tells you to hide. Every emotion tells you to wait for certainty. But certainty never comes. Not in real time. The people who built generational wealth in 1929, in 2000, in 2008, weren't the lucky ones. They were the ones who acted when action felt the most dangerous. Discipline is the bridge between opportunity and outcome. For the real strategy: reversing your human instincts. The average person buys during euphoria and sells during fear. The prepared do the opposite. They save when others spend. They study when others celebrate. They plan when others procrastinate. They accumulate when others capitulate. And when the crash hits, they don't hesitate. Because the preparation was done long before the first headline turned red. This is how crises transfer wealth. Not by destroying it, but by punishing emotion and rewarding discipline. And with the 2026 reset approaching, the window to prepare is still open, but narrowing. Every major financial crisis has two stories: the one the world remembers, and the one no one talks about. The world remembers the fear, the panic, the red charts, the collapses. But the forgotten story, the real story, is the one written in the years that follow. The story of those who turned chaos into opportunity. The story of those who recognized the cycle for what it truly is: a reset, not a ruin. And now, as we approach 2026, the stage is being set once again. Not for destruction, but for redistribution. Not for the end, but for realignment. Not for the collapse of wealth, but for one of the largest wealth transfers of our generation. The hard truth: the crisis will not treat everyone equally. Some will watch everything they built crumble. Not because they were doomed, but because they were unprepared. Others will transform this reset into the greatest financial leap of their lives. Not because they were lucky, but because they understood the pattern. The same pattern we've traced through every chapter of financial history. When markets fall, wealth doesn't disappear. It simply looks for new owners. Owners who have liquidity, patience, conviction, and the courage to act when others cannot. This is how fortunes are forged. This is how new financial dynasties begin. This is how cycles elevate those willing to stand on the right side of history. Your moment of decision. The coming years will challenge the world, but they will reward the prepared. And the window is still open. For now. The question isn't, will the crash happen? Because cycles don't ask for permission. The real question is, which side of the wealth transfer will you stand on? Will you react with the crowd? Or prepare with intention? Will you fear the reset? Or use it to redefine your future? History is watching. And the next chapter hasn't been written yet. If you want to be ready, stay here. On this channel, Finance Archives, we break down the hidden patterns, the cycles, the strategies, and the moves that the world's wealthiest families have used for generations. If you want to understand what's coming, not through fear but through clarity, you're in the right place. So if this opened your eyes, if it sharpened your instincts, if you want to stay ahead of the crowd instead of being swept away with it, subscribe to Finance Archives. Your preparation for the next great wealth transfer starts here.